Hi everyone, how y'all doing?
All right, all right.
Good, good, good. So I just talked to Jamal. He is on his way in. He was waiting for me to send him a link. I will probably go in and out because as y'all can see, my son is excited that it's Friday. So he's got a lot of energy. But I want to introduce myself for those of you who do not know. My name is Tish, and I'm the program coordinator at HeartLove Place. I do look a mess and all of that stuff because we were out. We have our garden event tomorrow at the Peace Park on the corner of MLK and Hour. So we were out canvassing that area. Me and Miss Viola, who might pop on a little later if she gets the opportunity. So that's why, yes, Daniel's on here. So that's why I look a little crazy. But thank you guys for coming. Jamal should be on his way in. He presented for us back last month. And it was just about, but not just, but it was about budgeting and just trying to like get your finances in order and just kind of like getting financially literate, should I say. Which really helped me. I don't know if you guys have been utilizing the tool that he sent me that I sent out. If you didn't get it, I can get it to you, which is basically like a little um, outline where you can put things in to help you kind of like better budget your money and your finances and things like that. Um, I'm really excited about this presentation because I too am on my way to home ownership, and I just want that for everybody. Like I get so excited about the thought, and I get so excited about people owning their home and transforming communities. I feel like when you own a home, I mean, I'm just excited about my house and I'm just as much as into it. But when you own, I feel like you get to be super creative, and it's something that you get to leave to your kids. So I'm excited about this one as well. So I thank you guys for being here. Does anybody have anything they want to say or?
I do.
Not you. I'm talking to the grown people. Does anybody have anything they want to say? I know Daniel James is my coworker. He's actually my
I do.
right hand. So he's here. That's
Hello.
Daniel.
I'm here.
So thank you, Daniel. But I don't know, Mr. Richard Martin. He was the first one on. How you doing, sir? For being on.
Hi, Daniel.
Um,
Hello.
um, Carlissa. I don't know if I'm saying that right. I hope I am.
Yeah, that's fine. Hello.
Okay. Hey, how you doing? And Antoinette, I know you were on here last time, so welcome back. Um,
Thank you.
probably forgot. We had a lot of people that actually registered, but it's Friday. People might have forgotten. I tried to send out emails. But basically, I'll introduce Jamal. He should be on his way in. Hold on just a second. Okay, so his name is Jamal Washington, and he is the CRA Relationship Manager for the Wisconsin and Minnesota regions for BMO Harris Bank. He partners with local organizations and nonprofits to offer banking and lending opportunities for low to moderate income individuals and their families. Over his 20 years of banking, he has worked on collections, underwriting, retail, banking, loss mitigation, home buying, education, and training. He has a strong desire and passion to help the community and to educate and serve unbanked and underbanked families to make the best finances and decisions for their family. So I thought that it fit. And he has another opportunity that I'll bring up while we're still waiting for him to get on. He brought up a bank called Bank On, and hopefully, if you guys are interested, hopefully he'll tell us a little. Stop! That's messing up the camera. He'll tell you guys a little bit more. But if you cannot get like a traditional bank account, which some people can't, sometimes we get these cards and they're, we think that because there's a name on it, that it's actually a to institution. And if it's not, like if you're doing the right thing with a card that is not attached to an institution, it will do wonders for you if you had an account that was actually attached to like an actual bank. So I think like that's what Bank On is about. That's not what this is about, but that's what Bank On is about. And so when he was talking about it, I was thinking about me personally when I was, a little younger, like 25 or something like that, and I wanted to start an account and I couldn't. And I was going to like check cashing places and all these other places, spending unnecessary money. And then I realized I felt like a little bit, and I started to build, I think, my name when I actually started. Back then, BMO was M&I. It was M&I Bank. So the way that he and this Miss Constance explained it, it got me to thinking like there may be people out there who want a relationship with an institutional bank, which will help you on these ventures, these presentations that he's actually talking about. So hopefully he'll tell you a little bit about that when he gets on. Mr. Jamal, thank you for joining us.
No problem. No problem. Thank you for having me.
Yes. So I gave a little introduction. I'll go ahead. We can go ahead and get it started. But I gave a little introduction about how awesome you are.
Oh, thank you.
And what you do. And then I was telling them a little bit about the conversation that me, you, and Constance had. Is that how you say her name? Mm-hmm. Bank On and how we're trying to pull them together. So that we can elaborate on that goodness that you guys. I know we're not going to get into that today, but I was just letting them know that we were in those talks and there were some excellent opportunities coming. So.
Okay, great. Yes, it is. I'm looking forward to that too.
Yes.
We can help as many people as possible.
Yes.
I know today we're going to be talking about healthy finances and home ownership.
Mm-hmm.
Let me see if I can share my screen here so I can start the presentation.
I love you, Mom. I love you too. Daniel, is there anything I have to do to let Jamal share his screen?
I believe we'll be able to do it. Let me just make sure the settings are correct.
As y'all know, I'm not a computer or as y'all will.
Oh, he's good. He's good.
Oh, okay, cool.
Yep.
Okay, cool.
Okay, you guys able to see my screen?
Yes.
I can see.
Okay, good. This is a presentation I did with our church, Evolve Church. We have a healthy finance class that we do once a month. We talk about various topics, whether that's home ownership or credit or investments and things like that. So we go through a whole bunch of things. So what I did was I combined some of the stuff I do for my job here at BMO with this, just to help people get prepared for home ownership. So we talk about healthy finances, preparing for home ownership today. And you can always stop me if you have any questions or if you have a comment to make. And as you know, because I did this with my church, there's gonna be some scripture in here. I hope that doesn't defend anybody, but I love the Lord. I'm not ashamed of it. So
thank you, Jamal. And that's why I appreciate this, because HeartLove Place is a ministry. And anytime we get to merge with, education and the word, we're going to do it. So I appreciate that part. That's what sold me on you presenting for us, because you was able to add that element, which I love and appreciate. So thank you for that.
No problem. So go ahead and get started. So there are some common myths that come with home buying. One of those is that you don't need 20% down payment to buy a house. In years past, that was a thing that you needed, but now you can get a home with as little as 3% down. And sometimes you can get into a home with a down payment of $500, $1,000, depending on which programs that you qualify for, as far as down payment assistance goes and grants that you can get. Income is not a deterrent from being approved for a mortgage. Some people think that you need to make $50,000 a year, $100,000 a year before you can buy a home, but it's not your income that could be a deterrent. What it is your debt to income ratio. How much money are you paying out of what you're bringing in? That's what gets you approved for a home. I know people that have made $10 an hour that are homeowners now because they got that debt to income ratio down. I know before last time we met, we talked about budgeting and things of that nature. So that's some important things. Once you get those bills down, it'll give you a bigger gap when it comes to the difference between your income and your expenses. And that's what's really what determines whether if you can afford a home outside of your credit. And you can also qualify for a mortgage while owing on student loans. This is something I share with the church, and this is something I can share with you guys now. A lot of people think because they have a huge balance in their student loans and they're in deferment that it would stop them from buying a home. But the thing is that even if you're in deferment, normally in banking, we do 1% of that balance. So let's say you owe $10,000 on your student loans. In most cases, it's a lot more for people. So what they'll do is take 1% of that'll make that your monthly payment. But what you can do is if you're on a deferment with your student loan company, is just you can set up a payment plan of making $20 a month or $50 a month or $10 a month and get that in writing. And what you could do is provide that to your lender or to your mortgage banker. And what they could do is make that your monthly payment, write it up. So that way it'll make that monthly payment that you're paying on your student loans a lot less. There's a program they have in Illinois right now. It's called Smart Buy, where if you buy a home in Illinois and you meet certain requirements, they'll pay up to $40,000 of your student loans. I hope they bring it to Wisconsin. I did bring it up when I talked to someone, DeWita, I think. I said, we should get a program like this here. So we can, not just Illinois, we should have it too. And also you can qualify for up to $9,000 in down payment assistance, and sometimes more. I've seen people get to $50,000 towards their home in down payment assistance and grants. I've worked at the bank over 20 years. I learned about this down payment. I learned all of this stuff in 2019. So a lot of this stuff it's out there, but it's not known. So one of my main goals, one of my main passions is to let this information be known as many people as possible. Even if you're not looking to buy a home right now, it's something that you can set up for in the future. Just know that is an option for you. You don't have to rent all your life or anything like that. Home ownership can be a possibility for you. You can have that American dream if your dream is to own that home and help build generational wealth as well. Now, as I know, most time when our church is majority Black, and so this is one thing I wanted to bring up because there are roadblocks to home ownership. Home ownership rates show that Black Americans are currently the least likely to own a home. For the United States as a whole, the home ownership rate is 71.9%. For Black Americans, it's 41.8%. And that's as of 2019. Now, this gap is even bigger than it was before discrimination was legal. So but when banks could openly discriminate against you, we had higher rates of home ownership then. So that tells you how big this gap is now. And that's why you see such a big push about the systemic oppression and everything that's going on, because you can see it in the numbers. And in the city of Milwaukee, it's even worse than that. This is in the city of Milwaukee. Overall, you have home ownership rates of 41.8%. See, it's lower than the national average for Black, Hispanic, or white. Whites are 56% overall have home ownership. Blacks, African Americans is 27.5%. Hispanic Latinos is 37.3%. So we go from 41 to 27. So a lot of things that's happening here in the city of Milwaukee, whether it's income, whether it's home ownership, whether it's car ownership, it's a big gap there that we have to work together to try to close that gap, whether that's through jobs, financial literacy and things like that, and just helping people get back on their, get mobile and get on their feet. Now, this is a graph showing it by the numbers, the percentage of owner-occupied households by race and ethnicity in Milwaukee between 1990 and 2017. So this gray line you see is for the whites. It went from 52% back in 1990 to being 62% in 2017. In 1990 for Blacks, it was 30%. 2017, it was 31%. So there hasn't been much of a movement. We were disproportionately impacted by the Great Recession back in 2007, when so many homes were foreclosed on during that adjustable rate thing. And it was a lot of predatory things going on, and people that didn't know were put in position where they just couldn't keep their home. So you've seen a lot of that going on. And that's why you see it still have that gap. Now we're going to look at the income. So for a white household, you have 55,000 as an average, is their median income. So that's the middle income between of all the income for whites is 55,000. For blacks, African Americans is 28,000. So we're making 52% of what the average white household makes. And so when you have that large of a gap, that'll help explain the home ownership gap and things like that. Because if you only have a median household income of $28,000, it's going to be hard to buy a home. And this is before taxes. This is not after taxes. So this is before Uncle Sam gets his cut in there. And this is the disparities in income. This is from TMJ4. I saw this slide. I had to take a picture of it, included in my presentation. In 1978-9, we made 58.3% of white income. Now it's 42%. So this gap is steadily widening, even as you see more opportunities out there, whether through technology and things like that. But the gap in our income is still dwindling compared to white America. And then we all know about this fact, Milwaukee being segregated 34% higher than the national average. And you see that as far as the housing, how much homes are worth, the neighborhoods where they are, you'll see that also impacted there. So we're not there yet. We have declining home ownership. We have gaps in property tax foreclosure, which is on hold right now because of the pandemic. We have insufficient financial education because it wasn't taught in schools. We were never taught about that when I was in school. I won't tell my age, but it was pre-2000. You have an older housing stock, and then you have race and gender inequity. But even though we have all these roadblocks, we can get there together. We work together as far as educating people, especially starting with our kids about financial education, letting them know the mental roadblocks that so many of us have. We have these shackles that we can never attain this or never get that because we've never seen that. But as far as taking that ceiling off and taking that lid off and saying anything is possible if we work together and put our mind to it. And in spite of those roadblocks, you can still achieve the dream. And this is one of my favorite set of scriptures is Romans 8:31 all the way down to 39. But I like Romans 8:31. What then shall we say in response to these things? If God is for us, who can be against us? I showed all of those things, but when you have God on your side, there's nothing you can't accomplish. If you saw so many examples in scripture, whether that was with Gideon and the 300 men against the army of 30,000, or however many it was when they fought against those, and they overcame them with a lantern and a torch, and they overcame it without even having to raise a hand. When Jehoshaphat was surrounded by armies on each and every side, and they came out with the choir singing and overcame that. When he said, "The battle's not yours, but it's the Lord's." And then you see Psalms 37:5-6. Commit your way to the Lord, trust in him, and he will do this. He'll make your righteous reward shine like the dawn, your vindication like the noonday sun. If we just commit our ways to the Lord, trust in him, and then do our part, we pray like it depends on him and work like it depends on us, there's nothing we cannot accomplish. We can accomplish anything we set our minds to. We have God on our side. We put God first, as it says in Matthew 6:33. Seek ye first the kingdom of God and his righteousness, and all these things will be added to you. So if we just trust in God and do what he wants us to do, because there's no poverty in heaven. So there won't be no poverty with us if we just trust in the Lord. So the home ownership potential responsibilities, some of the potential of home ownership is you have more tax savings, which as far as the mortgage interest you can write off. If there's any repairs that you may be able to write off. Also the financial investment. What happens is you'll see your net worth actually rise up. The average net worth of a homeowner is around 200,000. And for a renter, I think it's like 10,000. So it's a big difference as far as your net worth come once you own that home. But there are responsibilities that come with home ownership as well. You have utility costs, you have maintenance costs. You have to repair the appliances and replace them. You may have some possible structural repairs, whether that's the roof or maybe some flooring or something in the wall, home improvements. And then record keeping for income taxes. There's some things that you have to do. So I wanted to show this as well, rent versus own, as far as the savings and advantages. The advantages with rent is just a short-term commitment. You may just have a lease for a year, maybe month to month, whatever your term may be. It's a short-term commitment. There's less property maintenance responsibility, and there's less upfront cash or security deposit versus down payment. But as I was showing before, as far as with some of the programs that are out there, you may actually pay less in a down payment than you would with a security deposit. But with the home, if you own your home, you have an accumulation of equity. Let's say you've been renting a home for 5 years, the same place. So they'll say your rent is, let's say $1,000 a month. Let's make it easier. So for those 3 years, you've paid, for 5 years, you've paid, that's 60 months, you pay $60,000. You don't have any equity in that. So basically pretty much pay that person's mortgage. You might have paid their home off during that time. But if you own that home, during that time, you've built equity in there. So what you can do with that equity is then you can go out, maybe if you say you want to go to school, you could take out a school loan based on your home equity, or you can start a business. There's things you can do with that equity that you have. Then you have tax advantages as well. You can remodel and personalize that space as you wish because it's yours. And there's also a pride and ownership you have compared to renting. Some of the disadvantages when it comes to rent, again, there's no accumulation of equity. There's limited or no ability to personalize that space, no tax advantage. One thing as a disadvantage with home ownership is the property maintenance is your responsibility. You also have to worry about whether if you're in a condo, home owners association fees or property taxes. And there's also that long-term commitment. You may have the home for 10 years, 15 years, or 30 years, however long your mortgage is. You'll have that. But one of the things that impacts you getting a home is your credit score. I know we talked about this last time, but I was going to bring this up because credit is king in this world. No matter how much money you got, if you don't have the credit, it doesn't matter. So it's a numerical expression of your credit worthiness. Your scores range between 300 to 850, and with a good score being 680 and above. A fair credit is between 580 and 679, and good credit is 740 and up. And that depends on every lender. But if you're looking to buy a home, you want your credit score to be at least 700 or better. So that way you qualify for more loan products, as well as you can get more grants. Sorry, everybody's going crazy about the Dogecoin, so I'm getting a lot of alerts on my iPad about it. So how do you get and keep a good credit score? The one thing you want to do is pay your bills on time, every time. How you pay your bills is 35% of your credit score. Don't get too close to your credit limit. So you want to keep your credit at less than 30% of whatever your credit limit is. So let's say you have a credit card with a balance of $1,000 on there. You want to have your balance on there to be less than $300 each month, because you want less than 30% of your credit utilization. That's 30% of your credit score. And a long credit history will help your score. They want to see that you're able to pay your bills on time over time. It's a little harder with newer credit. Most banks, they want to see at least 6 months of experience on your trade line. So the trade line could be your line of credit. It could be your auto loan. Let's say you have a credit card, things like that. And only apply for the credit that you need. You don't want to have a bunch of inquiries on your credit report, because then it'll like you're having trouble. You're just trying to find credit wherever you can get. So you want to limit those inquiries wherever you can. And this is the reason why you want a good credit score, because of that predatory lending. When shopping for a mortgage, you want to make sure you look out for these predatory lending activities. They'll have higher interest rates and closing costs, unreasonably high brokerage fees, unnecessary closing costs such as prepaid life insurance. And predatory lenders most of the time, they target low-income borrowers, people that have less than perfect credit, and people with less knowledge about the home buying process. So you may see somebody that say, let's say your credit score is 580 or 560, something where it's not, you wouldn't get approved by a bank for it. You will have some predatory lenders come by and say, you can still get a home. We can get you a home. But y'all see you'll see an interest rate of like 12% of your mortgage. And that's pretty much, pardon my French, that's raping you as far as financially. Every month you just getting taken advantage of. And over time, you won't be able to afford that. Your mortgage rate shouldn't be more than a car note as far as the interest rate goes. And so what they'll do is they'll typically target people with less than perfect credit, people that don't know about the mortgage industry. And you'll see this a lot with brokers. They'll be having these high interest rates on a mortgage. Right now, mortgage rates are near all-time lows. I think they're like 3% is your mortgage rate right now. for a 30-year mortgage. I think 2.75 for a 15-year. So if you see somebody trying to offer you an 8% interest rate on a mortgage or something like that, you definitely want to walk away from that, because that's taking advantage of you, and it's not valid. And a lot of those brokers, they're just there to close that deal. And once that deal is over, they're done. They wash their hands of you. They go on to the next person, and you'll see them, and they have this big. You had to pay them so much money to get that loan for you. So you definitely want to avoid those. If you can't go into a bank and get a loan, or a credit union and get that mortgage, you don't want to deal with it. And I don't care if it's a friend of the family or somebody you know. That's because that doesn't mean anything. If they they will take advantage of it. I've seen it happen time and time again. A lot of people that failed during that the crash back in 2007 was because of predatory lending practices. They knew you really couldn't afford the home. They didn't care. They was just trying to close that deal. They have all these fees and closing costs, and next thing you know, it's bad. So that's the important thing about having your credit up to par. And you can always reach out to somebody, a professional or somebody you know that you can trust, to make sure that everything is smooth before you go through that process. But a lot of these mortgage brokers out here aren't going to give you the best deal. And that's just being a straight up honest truth. I'm not trying to sell you on a mortgage to BMO Harris. I'm just telling you the straight up truth. You can go with that, but it's going to hurt you in the long run. So when you're preparing for home ownership, what you want to do is first work with a home buying consultant agency. And what they will do is they will review your credit with you. They'll get a soft pull of your credit. A soft pull means it doesn't affect your credit score. So they can go over your credit with you, and they can go through and see what steps you need to improve your credit, and help you with a budget. And they can help you with credit help. Also, what they can do is they'll just work with you for 30 days. If some of them, if it takes you 2 to 3 years, they get ready to own a home, they'll work with you all that time. And then also they have access to grants to help you with the home buying, whether that's a grant for $2,000 or a grant for $5,000, a grant for $10,000, depending on the location that you're trying to buy a home at, your income and things of that nature. They can give you access to grants. So you definitely want to work with a home buying consultant agency. And if it's your first time buying home, you're going to have to work with one anyway, because they got to be HUD certified, because you're going to have to go through first time home buyer counseling. You have to take that class and get a certificate in order to get your mortgage as part of the requirements. So you definitely want to work with a home buying consultant agency for that. And some are nonprofit closing consultant agencies here. You have Axe Housing, and they're on 24th and Elite. You have Housing Resources. They're on 76th and Burleigh, and there's one out in Waukesha and also Racine. You have the UCC, United Community Center. They're on 9th and Mitchell. Moving Out is based in Madison, but they're statewide, and they help people with disabilities. So if you have someone in your household with disability, whatever that may be, they're not going to make you have to give out that documentation of it. But just say you have someone at home with a disability, they can help you as far as getting you ready for home ownership. And also they have access to more grants and more grants as well. I seen somebody with Moving Out, they got almost $60,000 towards their home. And again, the benefits of working with nonprofit is the costs are minimal. If you're approved for a mortgage, it's going to be included with your closing costs. So most time it's around $500, but the most time that's taken care of for you already. And they're not getting paid by the bank to decipher them loans. They're going to make sure they find you the best lender with the best rate. And also by working with a nonprofit housing counsel agency, even after you buy the home, they can help you. They'll help you as far as, let's say you need some counseling on something, or if you need some help, like Housing Resources right now, they're doing something. Anybody that's been affected by the pandemic and having problems making their mortgage payments, they're working with them to get that, help them with those mortgage payments up to 6 months, I think. And also they can help you provide tools for home repair. If I could say, instead you have to go out and buy tools, they can help you with those tools, like you rent them instead of paying the full price for them. And before you look at a home, especially in this climate right now, where it's a seller's market, as soon as they put a house on the market, you'll see 20 offers within a day. You want to either get pre-approved or pre-qualified. Now, pre-qualification is just an estimate. They're going to estimate how much you qualify for and your monthly payment. It's going to be based on how much you earn, based on what you owe. They're not going to look at anything as far as, you don't have to bring anything in. it's all going to be estimated. You're going to give them an estimate of what you earn, give an estimate of what you owe. They're going to pull your credit to see what programs you qualify for. So your pay stubs, anything like that, if you want to bring that in, there's a pre-qualification letter saying what you're pre-qualified for. Now, after they go through everything, that pre-qualification may change. It may actually get lower or get higher, but you definitely want to get pre-qualified or pre-approval, which is a written commitment letter saying how much you qualify for. And this one, they're going to look at your payment. They're going to look at your tax returns. They're going to look at your proof of income, whether you're self-employed, and that's your profit and loss statements and your Schedule C. They're going to look at your pay stubs if you're a regular worker, or let's say you're retired or you're on Social Security. They're going to look at that as well, and they need proof of that. They're also going to need most recent asset statements. So that's your most recent bank account statements, or if you have a retirement plan, they want statements of that as well. And then any other information they may need determined by your banker, they're going to ask for. But with that pre-approval, that's the amount you definitely qualify for, that you are pre-approved for. And if you can find a home and you can put an offer on it, that pre-approval is there. But the reason why you want to get pre-qualified or pre-approved before you go look at a home is because, let's say you go see a home and you love it and you say, oh, I got to have this house, but you haven't talked to a bank or a lender or a credit union or anything like that yet. What you then have to do is, after you look at that home, is you have to go see if you're even qualified there for that much home to even pay for that home. And let's say that at time you're going to work with a bank to get pre-approved or get pre-qualified to go back and make an offer in that home. Somebody may come in and make an offer on that property while you're doing all that. So that's why you want to do this before you go look at a house. Most real estate agents or realtors you're going to work with are going to make sure that you get pre-qualified or pre-approved before you start looking at a home. Now, these are just some of the down payment assistance grants that we have here in Milwaukee. There's a Wintrust Home Buyer Grant Program, which is for $2,000, where they give you a grant. You work with either Axe Housing or HRI. They can give you that grant. Then near Westside Partners, which is between 21st and 27th of Wisconsin, if I'm mistaken. They have a $2,000 live, work, and play program. Haven Woods is another organization they have, and they're out there between Silver Spring and Good Hope, from Sherman to 76th Street. And what they also have a program, like I say, you work out there, that you can actually buy a home out there and you get a $3,000 grant towards it. In the Harambe Homeownership Empowerment Program, in the Harambe area, you can give the $10,000 towards a home. And that's my last one. Let me get out of here. I'm gonna stop sharing my screen. Does anyone have any questions? I know there's a lot of information I went over. Is everybody okay, or?
I don't have any questions, but I am in the process of going through the home buying thing.
Mm-hmm.
And I just want to say, you might not think you qualify or you're eligible, but I want to tell you guys, you should try it and see. Especially if you have some of the things done and outlined how Mr. Jamal is explaining, your debt to income ratio is kind of decent, right? Like with me, I had to get some of my credit cards in order. So I was at my max, like you were saying, don't get close to your max. I was at my max.
Mm-hmm.
Told me I had to knock them down. When it came to my student loans, I have those and I have $60,000 worth. And I thought that was going to stop me from being able to get a home, but it wasn't. I just had to print the status that I'm in, which isn't a good status. So, you might think that you have some blocks, and really they're not really blocks. So you can attempt, because I never thought home ownership was real for me. You just don't think that. And I know through education and being in the community, I learned, different things, and there's resources, all the resources you pointed out are so on point. I'm actually going through ACTS.
Okay.
Yeah, I'm going through ACTS, and they, like you said, they're with me every step of the way. Every 30 days, I make contact with somebody. I'm constantly updating things. And the thing is, with them staying on me, I appreciate it, because she told me I had to get rid of my cable. Hardest thing ever. But like, when she talks to me the next month, she's like, Letitia, did you do it? I'm like, I'm doing. She's like, Letitia, come on, do you want it? I'm like, I do, so I had to get rid of it, so it makes you really think. Like I said, you gave me the budget thing. She talked to me about the budget thing. I didn't do it then. When you brought it up again, I'm like, okay, let's try to write these things down. So like everything you're presenting is right on point, down to like the grants and things. I just want us to know, like, we can have homes, we can have things to pass down to our kids. Yeah, I appreciate you for presenting on that for us. And I don't know, like I said, if anybody else has any other questions or any feedback. I know it was some.
Yeah, I work a lot with Axe Housing.
Do you really?
Oh yeah, I know the program coordinator D and some of the counselors. They're great people, and they really have a passion for helping people get into homes. That's a passion they have. So, and they're gonna help. They're gonna be with you every step of the way, and they're gonna find grants for you. They're gonna do everything they can. And
she does. She lays it out. She lays out the different grants, my options. Depending on your credit score. I'm still trying to lift that a little bit more, but she gave me options, and just like, I'm like, this is really possible. So like with all that like stimmy money floating around and all these tax dollars, I was like so tired of wasting money, just unnecessary things. And then once you start to see money, I started a little bit before all this other stuff, but once you see your money starting to be in your bank, you start to look and feel differently about what you want to do with it moving forward. So I just want everybody to be on board with that. Like, it feels good, and it feels different from what I was when I was younger. That's why I want to get some teens involved, Jamal, just so you know, with this literacy stuff. But yeah, it's awesome info. So I appreciate it. So
yeah, I'm always available if you need me to share the information again on a Tuesday, Wednesday, Thursday.
Yeah.
I'm here. And I can tailor it. I can switch it up as well to make it more. But it's good to be able to, to bring the Lord into everything. I love being able to do that. So I can't, because we just don't realize how important it is to have him on our side with everything. I've seen people that, because of their faith, because they trust in God, how he opened doors for them, even in this time where it's a seller's market, where people are paying $20,000 more than what a house is worth without even looking at it, without doing a home inspection or appraisal just to get it. God is still opening doors to people, even in this time. We find, like Isaac, we find favor in the famine.
Okay.
So, and
he be working on our behalf.
And Acts was established by a church. They were established by a church. Yeah, back in the 80s, they were established by a church because they really wanted to get people back into home ownership. And then it extended from there. So it's a Christian organization, just like Habitat for Humanity.
That's why I feel that,
Yeah, they are a Christian organization. They really want to help people get into homes and to have that joy, because in the city of Milwaukee, a lot of the rates, especially the rents, especially in the inner city, are considered predatory. Wow. So what we're paying for rent, value-based, is not worth what we're paying for the rents in our area. So if you say you live on 25th and Burleigh or 22nd and Brown, you might be paying a rent that you basically could pay for in Wauwatosa and have a much better place.
Wow.
But yeah, it's so much stuff that happens in the inner city as far as the rents go and things like that we don't pay attention to, but it impacts us, it affects us. And those homes they may have paid $20,000 for it. And let's say you paid $1,000 in rent. You done already paid for the house back for them in a year and a half.
Right.
And then anything they make from that point forward is income. And then they can pass it on to their kids, and they charge money. And so it is considered being a steady wealth builder. And that's something that we should be doing for ourselves as well.
I know that's right. That's what I'm on. That's what I'm on. Thank you for that. Do anybody have anything else to say or any questions?
No, I agree with that. That's why I'm here, because I'm paying like $750 in rent, right, on the east side of Milwaukee. And I don't have like yard space. I have a child. It was an emergency move, but I've been there for almost 2 years, and I've just been counting, like, this is money that could have went towards, my own home. But at the time, there was a need for me to rent or whatever. So maybe I do have a question about that in between phase. Like, when you're renting, And like you said, sometimes you feel like it's not even feasible
Mhm.
because you're so busy and you're constantly paying rent. So you're trying to see like, how can I even get my finances together to begin the home buying process, you know?
Mhm. Yeah, you can always again, you can reach out to Axe Housing right now. Even while you're saying, look,
Mhm.
I want to get ready for it, they would get down and help you get ready to buy a home.
Mhm.
And get you started in that process where they'll sit down and go over your expenses with you, help you set up a budget, and get you ready for that next phase of home ownership. And a lot of times you'll see, especially through Axe Housing, they'll be getting homes where your rent, your mortgage, that's taxes and insurance included, is around $600, $600,
Mhm.
$700 instead of the $750 that you're paying. Um,
Yeah.
but you can always, you know, what I did one time is I wrote down everything I had that I spent my money on for a week. I just wrote it down, and it shocked me. And then also what it made me do was because I had to write it down. I didn't want to buy anything because I had to write it down. It made it hard for me to do it. So I was spending so much money on food and unnecessary things. Getting Gatorades for $2.50 at the gas station when I could have just got them at Pick and Save $10 for $10. But it makes you pay attention to what you're spending, especially during this time in this pandemic where most of us are in the house and we really can't go anywhere. We spend so much on food and things like that, and streaming services and things like that. Just sitting down, look at your budget, see where you can cut some corners at. You'd be surprised at how much money you can save by just looking at everything and saying, wait a minute, I could get rid of this. Oh, I spend all this money on this. Like some people spend what was it, $5 a day on Starbucks. And if you go to work, let's say 5 days a week for a month, that's 20 times 5, that's $100 a month just on coffee. And you're not even getting full off of that. You still got to eat. So, it's ways you can look at of doing things. But I would say this, you can go online at Axe Housing and set up a appointment with them, and they can go through all of that with you, or HRI or UCC. Or if you want me to give you some advice, you can always reach out to me. But it's a lot of places and people out there that can help you. Where do you stay at on the east side? Are you by Houghton?
Yeah, I'm off of Houghton, so it's like, I guess, considered the River West area on Bremen.
Okay. There's a financial clinic over there. It's called Riverworks Financial Clinic. It's on
Yeah, I
Houghton
don't live
and
far from that place either.
Houghton and Concord. You should go in there, and they have resources there for taxes. They have there for like home ownership, as well as helping you make a better budget, and it's free.
Oh, okay. Yeah, thanks. I always seen that place and I knew it had certain resources, but I've never been in there before.
Yeah, just check them out. It's a lot of different, and then they can also link you up to other places that can give you help too. But they do it all for free, so it's a great resource. I've done a lot of work with them as well, so highly recommend them.
Well, yeah, this is a question. You correctly mentioned the credit score as being one of the most important parts of this process. So here's my question: would a lender, and you're in a bank, and I imagine you can speak for credit unions too, would a lender consider information that is non-traditional information, like just say a loan applicant has lived in the same residence for 4 or 5 years, has paid his or her rent on time every time? Would it be worth bringing that to the attention of the lender?
In some cases, yes. It's one time you really want to do that is let's say you don't have enough trade. You need at least 2 trade lines on your credit report. But let's say you only have a credit card, you don't have anything else. In that case, the lender may be able to write it up so they can say that you've been paying the rent at this time and get something from your landlord saying this, or get the landlord to put that in your credit report. Because I know what hurt a lot of people was We Energies got taken off your credit. It hurt some people and it helped some people. But We Energies was taken off the credit report back in 2019. So it stopped reporting. Some people that gave them their score because they paid their We Energies bill on time every month. But once that was taken off, they didn't have anything else on there. So then they had to, establish credit all over again. And sometimes you could write to We Energies to get that put on your credit report.
Right.
But those cases, it's a one-off scenario, like different scenarios, but it depends on what they already have in their credit report. If you have enough trade lines in your credit report, they won't need to anything about your rent. That's only if you don't have a lot of established credit. And I know Carlisa has a question here about a foreclosed
Yes,
home.
I was just gonna say, she says, is she on there, Miss Carlisa? I can read her question. She says, what about foreclosed homes? I want to pay cash for a house.
The thing with foreclosed homes, the one thing you want to look out for is that they're sold as is. So you really want to make sure you do a good, you know a contract, somebody in there where they can give you a good price and they can help you as far as repairs go. So you're paying cash for it, you won't have to worry about going through a lender where they have to go through all the problems with you. But you want to make sure you know somebody that in case you have any problems with it. I could tell you some horror stories about people that had their homes foreclosed on and what they did to the property. I used to work in collections, so I trained the foreclosure department. So it was one person was losing their home. And so what they did was they put raw chicken in the pipes. It just messed the whole house up. But what happens is when somebody went to buy that home as a foreclosed property, they bought it as is. And in some cases, they may have let you in the house so you can see everything. You might just see the outside. So if you're going to buy a foreclosed home, just make sure you do a good inspection of it. Have somebody with you, a contractor, somebody that you could trust that can tell you if there's anything you're gonna have to come out of pocket with after the purchase.
Thank you. And you guys, you know what? I'm gonna have to end it because it is 7 o'clock. I have to be respectful of everybody's time, including my own. But Mr. Washington, I thank you so much. Like I said, I literally co-sign. I'm not a professional, but I literally co-sign everything you said because I'm going through it and it's all right there, outlined exactly how you said. And I appreciate the resources that you gave. I will be seeking out some of those. And if I know we'll be posting this, so if anybody, gets back to me, sometimes they do from our videos, I'll be reaching out to you if possible, just so maybe you can make contact with them and give them whatever it is they're whatever question they have, maybe you can answer for them.
No problem. I'm here to help. And Miss Antoinette, make sure you go to Riverworks.
I think she got off,
Okay.
But I will let her know. Me and her have been communicating a little bit, so I'll definitely let her know to go down to Riverworks and communicate with them. But I thank you guys. Have an awesome night and an awesome weekend, and you guys be safe.
All right, be safe, everybody. Have a great one.
Thank you. Bye-bye. Bye.
You have a nice night.
All right. Bye,
Thanks for
Daniel.
letting me attend.
You guys have a good one.
Bye, Daniel. All right.